Well, 8:45, so let's get in some stock strategy. Siddharth Bhamre as well joins us on the show right now. Siddharth, before we get to stocks, morning, what is your Nifty view? Considering it seems, looking at the global setup, it may not be the best of starts.
Good morning, Asha. My opinion is that, first thing, the consensus that the rally which we saw last week may not continue, and that's quite an easy way of putting down the way market would move this week. But at the same time, data, especially from, which I closely track, is FIS movement, clearly suggests that liquidity is coming back. I don't know how long this liquidity would, continue to pour in. But as of now, liquidity is coming. We are seeing FIs continuously buying. In fact, in yesterday's trading session where, we were going down, but we recovered in last half an hour. There also we saw a good amount of cash was buying, fresh long positions created in index futures, not much of activity in option segment. And if I look into March series in toto, then there have been significant buyers in index futures, which is a positive sign. Cash market buying is there, and they have bought immense amount of index options, mainly put options, and that's the reason we are seeing put call ratio of open interest touched one level after a pretty long time, that is after 28th of October if I'm not wrong. So all these factors put together suggest that the momentum may dry down, but that doesn't mean that you should start initiating short positions in Nifty at this point of time. So we were long index last week. We would be more stock specific this week. We are not expecting huge movement on the other side in this week of the market.
Okay. Mitesh, little over 8:45. Let's discuss your pending ideas.
Yeah, I have a buy on Infratel, which had a very strong kind of intraday signal yesterday. My sense is that I think, this has triggered a short-term trend which could see retest the earlier highs of 390, 395. And I would suggest buying that one with a stop at about 373 for targets of 390. And the other call which I have right now, that's a buy as well on Lupin, which managed to get past the swing high, also managed to get past the 200-day average. I would buy this one with a stop below 1800 for targets close to about 1870.
CK, what about your positional play?
Well, for positional play today, I'm looking at Colgate-Palmolive. Colgate, surprisingly, in the rather solid week that we had post-budget, Colgate could actually rally just about, insignificant 1.5 to 2%, which clearly indicated that there is considerable pressure going on in this stock. And I think bears have suddenly seemed to have taken hold of this stock and are pressuring it lower. And even in the trade yesterday, it seemed like they were on the ascendancy. And the recent, slight consolidation zone near about 820 is under threat. I think it will give way. 790 is where the nearest support is, and that would be a significant support from a longer-term perspective. I think Colgate needs to defend that very, very stoutly. Otherwise, the very, very bullish history of Colgate might get slightly rewritten for the near term. So I think holders need to be on a little bit of a watch here. Something different is afoot. So long out of it is that currently Colgate is under pressure. Short-termers can look for further decline. Long-term holders need to be slightly alert on this stock as something different is going down.
Okay. Thanks for those funda ideas. Let's get in, thanks for the technical ideas. Let's get into some fundamental ideas as well. And Kunj Bansal, interesting names. Forging, of all the auto component companies available, why Forging?
Yeah, multiple reasons. So one, we are in a market which over the period of last 12 months is sitting at a 20%, almost 20% correction. Individual stocks may be more than that. Put it in other words, a market which is at a 10% rise from the recent low that it touched. So as a result, some stocks have recovered. So this particular movement of the market gives us a very sweet opportunity to try and find out those stocks wherein valuations have corrected. Let's keep in mind that because of the sharp interest in mid-cap stocks and continuous money inflow or the buying or the demand for mid-cap stocks, hardly till about 2.5 months ago in December, if we go back, the quality mid-cap stocks were in huge demand, but their valuations had become something at which possibly one was not comfortable buying. Now, thanks to this 2 months sharp fall, the valuations have corrected, and which is where we have to choose some good stocks out of the multiple options available. And that's where forging comes. To answer your question, why only forging? Within a forging space, if I look at, this is one stock which has good fundamentals, EBITDA margins almost close to 20%, return on equity more than 20%, and valuation now with the correction available at an 8.5 times forward, depending on what earnings one take. Of course, given the current subdued environment, the Q3 numbers, the December quarter numbers did not show much growth. Maybe immediate 1 or 2 quarters may still not show growth because company is operating almost at 100% capacity utilization. But its capacity expansion is in stream, and it is likely to come for commercial production towards the second half of FY17, and which is where we will see huge growth coming into the stock. And that is when, if not in the immediate short term, but we can see a return coming in post the capacity coming on stream. And that's the reason, as I said, good fundamentals, good margin, good return ratios, attractive valuation, which is what one tends to look for as an optimum combination while buying stocks on a fundamental analysis basis.
Okay, look out for Forgings. That's a conviction call coming in from Kunj Bansal. But Sandeep, you too really like Dish TV, and you believe that the stock could go as high as 110?
Yeah, I think, see, there are a lot of small caps which are very interesting today, but I think we'll let March pass before we look into the small cap segment. There are several established, beaten down mid caps which we think should be looked at. I think Dish TV is one of them. In the budget, the excise duties were removed from set-top boxes. This got missed out in the entire carnage which happened on the budget day, and subsequently also people didn't pay too much attention. Government is focused on digitization, and I think that process should pick up steam from here on. And the subscriber addition from this quarter onwards is expected to be very strong. The pricing power overall in the industry is now coming back as the industry has consolidated and the cash burns became unsustainable over the last few years. So this is a typical J-curve kind of stock where initially you made losses, and those kind of losses are now reversing, and it will lead to huge cash flow generation over the next 3-4 years. The stock went to 110, 115 just a couple of months back. Then in the entire market carnage, it's fallen to the current levels of 77, 78. I think it's a very good story, and we should see the stock rally at least 30-40% over the next 1 year.
Kunj, you also like JK Cement. Now, why have you decided to go ahead with JK Cement, more like a regional player, a small player, when the large cap cement companies are available cheap? Why one should settle for a regional player?
So, when I say JK Cement is something I like, I am not at all saying that I don't like some of the other cement stocks within mid-cap as well as in large-cap stocks. It's more specifically that one, because of the SEBI's requirement, we have to come prepared with some compliance requirements. And also one has to choose. There are more than 1,000 listed stocks. In fact, numbers is closer to 4,000, 5,000, depending on what number one wants to take. For the purpose of discussion, I have to choose some stocks and come to you. So having said that, as I said, one, I like JK doesn't mean I don't like others. Of course, with the current correction in the market, large caps have corrected as well. Specific to JK Cement, 2-3 things. That one, despite, as I was talking earlier, subdued environment, this is one company whose volume growth in December quarter as well was there. So companies amongst the largest player in white cement as well, besides the grey cement. In white cement, it had a volume growth of 11%. In the grey cement, it had a volume growth of 16% for the December quarter YOY. Now, that speaks that despite, as I said, overall subdued environment, company continued to have growth. Of course, the pricing power was not there with the industry. As a result, it did not convert into too much of top-line growth in rupees terms for the company, but still it had a 13% rupees growth for the December quarter. Having said that, again, mixing it with the fact which, as I said earlier, that in this market, one has to look for stocks which have now started to become available at attractive valuations. Also, the fact that in the recent past, in last 1.5 months, cement industry is seeing some demand pickup and has been able to as a result get back its pricing power, and there are based on the channel checks and dealer checks, there is news inflow that anywhere in the range of 40 to 70 rupees per bag cement prices have been hiked in 2 or 3 installments over the last 2 months. As I said, the valuation is attractive. Stock available at almost 6 to 7 times EV EBITDA, significantly corrected from the peak, well-managed company in the cement space. And that's the reason for my pickup. They also have capacity expansion lined up, which will start giving them higher volume growth in the time to come.
Okay, now let me just revisit the global setup and what kind of global cues we are working with. Now, we are not working with very excellent set of global cues. Red is the more dominant color, but that's perfectly acceptable. Both locally and globally, we've seen a very strong risk-on rally. Just about everything and anything has rallied from about 5 to about 15% in a matter of just 4 or 5 trading sessions. Crude may be off from Tuesday's peak, but it is still trading at a very respectable level. Crude prices in this year from the recent low, they are up more than 40%. Iron ore prices from the recent low this year are up more than 50%. So clearly there is some degree of mean reversion which has happened in just about every major financial instrument, be it commodities, emerging market equities, or for that matter emerging market debt as well. But the stock which I want to discuss, Sandeep Sabharwal, with you is Maruti. And sometimes consensus can get it completely wrong. And Maruti is one stock where consensus has got it completely wrong.
Yeah, that's true. And I think it was the most fancied stock of last year and kept on moving up. And it
25% down this year. I mean, second biggest loser on the index only after BHEL.
Yeah, I think it's given up most of its gains of 2015 with this fall. So the point now is that what from here? What's happened is happened. And from here, I think it's one of the better consumption plays in India. It's well placed to ride the recovery, and as well as it's a beneficiary of any interest rate cuts which happens from RBI, which should happen sometime in April. I think in the policy only now it will happen. And as rates trend down, and as in April liquidity eases out, we'll see the market rates trend down. The benefits of government measures as well as the pay commission recommendation implementation will come directly to Maruti, because if you see, the first beneficiaries will be the two-wheeler companies as well as the company like Maruti, because of the kind of strong brand image it has in semi-urban, urban as well as rural areas. So I would say that it represents value at this price, and from here I wowould say that even if it goes back to its the level from where it started falling over the next 18 months or so, it will represent a 15-20% CAGR return, which is possible in this stock.
Nobody's talking about the new car launches, Neeraj. And the showstopper yesterday was the new SUV, priced at about 7 lakh rupees. It's just going to change the dynamics of the entire urban SUV market. So, Neeraj, we may look at the stock performance of Maruti and say the stock is still expensive, but boy, I mean, they really know how to really have a dominant presence in some of the key markets.
Well, yeah, you never know, Nikunj. The Duster came, or the Ford EcoSport came and spoiled the apple cart for the 13-15 lakh rupee SUVs. Maybe what Maruti does could spoil the apple cart for the Cretas and a few others as well, which are priced at about 12. Could be interesting. The management has been confident about the volume growth picture going ahead as well. So it should be very, very interesting. Is Maruti 3462, a bit of a down day yesterday. Siddharth, I know we have to take your stock ideas, but if you can give me a quick view, a 20-25 second view on Maruti, how is it poised for trade?
So Maruti is looking weak, and we have seen, formation of short positions also continuing in this. Yesterday, though, it was not, the quantum was not huge. I am expecting, stock to probably, find some support around 3200 odd levels, which is not very far from current levels looking at the base of the counter. I won't, initiate fresh short positions in Maruti at this point of time, though I feel, further downside till 3200 is pretty likely.
Okay. Stay on, gentlemen. 30 seconds to the pre-open session. Lots more to talk about with our experts in terms of ideas as well. But the pre-open rates will come up in about 30 seconds. Watch out for specific stocks. Concor. We're talking about mid-caps today predominantly. Concor should have a bit of a downtick because of the OFS. Do watch out for the metal names. While the markets will probably start off 0.25% lower, the Vedantas and Care Indias of the world should be suffering in the session today. And then do watch out for Monsanto. Could be an interesting day of trade for that one. Actually, even Kaveri seeds. But here are the first trades. No, we won't have a 1% downtick on the Nifty, but we certainly should be off by 25 odd points. Let's see. Let's give these rates some time to stabilize. Bring up the commodity names. I think they should be the ones which could be under a bit of pressure today. So Vedanta, yes, down 10%. KN India. ICICI Bank has a 3.5% downtick. I don't think that will quite happen. BPCL has a 3% downtick. That could change as well. And KN just about a percent downtick. I think that will change. It will probably worsen. So let's wait and give these rates a chance to stabilize. As we speak, the Sensex is actually showing a green tick as well. So it's all over the place right now. Though I do want to mark what PSU banks are up to, because yesterday BOB and SBI took it on the chin, in a manner of speaking, compared to what they've been doing. In today's session, they've started off flat. Maybe Concord is under a bit of pressure, and I want to see what Kaveri Seeds predominantly is up to, because what was the rumor now seems to be a certainty, and that should augur well. A lot of the price action could well be in the price, frankly. A lot of the positives could be in the price, but this should augur well for Kaveri, should not augur well for Monsanto, and those two stocks on the broader end of the spectrum could well be active today.
Just some other names. HDFC, which has started its talks to buy Larson's general insurance business. Idea, which has offered a sizable 4,000 crore rupee to buy Providence's 16% stake in the unit. ITC, again, a capex to invest into their Telangana pulp unit, so look out for that as well. And Reliance Industries, which is planning to invest $2 billion in its India cable TV. Tata Motors, the JLR Feb sales come in higher by about 31%. And Vedanta would seize metal demand potential in China even with the slowdown. But Vedanta has cracked hard today. The rupee as well, after many days of consecutive strength, you're seeing some bit of weakness trickle in. So about 13 paise weaker this morning, 67.46 is where the currency is. Let's go across to Ajay, find out what the D Street chatter is this morning. Ajay?
Good morning, Aisha. Aisha, the market and the traders are not really ruffled with the kind of global Q, the weak global Q. So they have mixed good long and short ideas coming in. IDBI Bank, that particular stock, has run up almost 40% in the last 1 month alone on QIP talk, but there is a lot of interest coming in to book profits, so that particular stock could tick lower in today's session. Watch out for that. From the mid-cap space, Arrow Coated, that is one company, biodegradable, water-soluble product company, mainly works with a lot of pharma companies, has recently, just last week, tied up with the Spanish chemical company. There's a lot of institutional interest, and big fund managers are queuing up to meet the management. Look out for that particular company. Some delivery-based blocks are expected to exchange over there. And the last one is Motherson Sumi. Fresh long positions were seen in yesterday's session. In fact, a lot of institutional shorts are covering, and now the stock is almost at 245, 250 rupees a share. Dealers expect up move to continue in the medium term, so watch out for Motherson as well.
Ajay, thanks a lot for that. Now, let me just highlight an important news development for the benefit of our viewers. Rajiv Jain, who I'm using the word was because he's resigned from Wantabel, who was the staff fund manager for Wantabel, has decided to move on. Now, Rajiv, of course, is a old India fan, and out of the $5 billion of asset which were managed by Rajiv and by Wantabel, he had a significantly high exposure to India. The MSCI weightage for India is closer to 15%. His funds were running an India exposure of about 27%. Now, historically, we've seen that every time when a fund manager, he decides to move on, the new fund manager, they normally tend to change the portfolio holding. Westlife saw a block deal where Wantabel has already exited out. Some of the other key holdings of Wantabel are HDFC Limited, ITC, HDFC Bank, Sun Pharma, HUL, HCL Tech, Infosys and Cipla. So let's see what happens there, because since Wantabel has a very large exposure to India, now could that exposure be changed? Could that exposure be tinkered? And what will happen to some of his key mid-cap holdings where Rajiv had a high conviction and maybe the new fund manager may not have such a new conviction? So let me ask a fund manager only. What happens when there's a change of guard?
So I think on the mid-cap side, there will be significant changes.
There will be changes.
Yeah. So I think that portfolio should get totally revamped.
We saw that in Westlife.
Yeah, so that will be one stock, because the perspectives on mid-caps will vary very differently. But on large caps, such huge changes will not happen unless they are cutting down the exposure per se.
Which could also happen.
Yeah, so then it will be across the board, small quantities. So maybe a few, and maybe some of it has already happened because the announcement might have come now, but the decision might have been taken a few weeks back or a few months back. To that extent, I think where people should be more careful about is on the mid cap side rather than the large cap side.
Well, talking about large caps, the other one in focus today has got to be ICICI Bank. Considering the stock has been a little stuck for the time being around its 50 DMA of 220, 221 thereabouts. Siddharth, before we let you go, a quick call on ICICI Bank and where you see that stock headed.
So I'm not very negative on private sector banks anymore after what we saw in budget and how short positions are getting unwinding over there. There are still good amount of shorts which are there in stocks like SBI, PNB, ICICI Bank as a matter of fact. So I would not suggest shorting despite we are seeing some weakness happening in the counter of late. But I'm expecting Axis Bank and ICICI Bank to continue to do well. So I am positive on this space. Bank Nifty per se also I feel that 14,500, 14,600 is very strong support. And if ICICI and Axis continue to do well, don't think so Bank Nifty would be going to the support levels as such. So don't short ICICI Bank.
Okay. But you're not all that positive when it comes to Infi and Tata Steel. What's the strategy here?
So Infosys, we have been suggesting since last week that one should short at current levels. 1180 to 1200 is very strong resistance, Aisha, multi-month resistance for Infosys. We have seen that the rise from sub 1100 to 1170, 1180 odd zone was purely and predominantly because of short covering. We haven't seen any formation of long positions. We are seeing some traces of formation of short positions. I'm expecting stock to go down to the lower side of the range, which is around 1100 rupees. I'm not expecting it to breach that support, but may go and touch. It's in a range now, 100 points range, 1200 on the higher side, 1100 on the lower side. So hence the short position over there. Tata Steel, initially when it was bouncing from 230 odd levels, we did see formation of long positions, and it was quite a strong conviction buy. 295, 300 is very strong resistance zone. I'm not expecting the stock to breach it. Of late, we have seen some unwinding, and this unwinding is unwinding of long position. I am not saying that there will be a change in trend in Tata Steel and it's going back to 220 or 200 levels. What I'm trying to say is that there would be a long unwinding pressure in this stock, and hence one should create short positions. I have a target somewhere around 258 in mind. You can fix stop loss somewhere around 303 and go short in Tata Steel.
Okay, fair call. By the way, look at Monsanto as we speak. The first 8 minutes of the trade coming to a close, and I think Monsanto is already showing its hand, down about 5.5%. So this is negative for Monsanto. Yes, I wonder if Kaveri Seeds is showing an uptick of equal stature. Just bring up that one also for you, because both the stocks will react. No, not so much for Kaveri as well. Maybe some of the move was already in the price, but the other stock which is looking slightly up right now is a company called Techno Electric, up to 2.5% in the pre-open session. Kunj, the market is preempting your liking for this company. What's the rationale? Why do you like Techno Electric?
I don't think market is preempting my liking. Market is the biggest god. And we have seen the history and track record that whoever has forgotten that, market has taught him or her that that's not the case. Having said that, let me put some things in perspective that if we go back to the budget, there was very clear investment or expenditure focus on some of the sectors, namely the two of which majorly were the roads and highways, and power, excuse me, power transmission and distribution. I am not talking about power generation as much. So this is a company which comes from one such sector, that is power transmission and distribution, has been performing exceedingly well. As I said earlier, in this market, stocks which have corrected in terms of valuation, which have continued to report good numbers, including as recently as in December quarter, despite overall subdued environment, and are likely to report good numbers. So just for the information, for the December quarter, my numbers could be a little bit here or there. Company had almost a 70% rise in its top line. It's into the EPC business in power T&D space, setting up substations and all the lead activities. And that's the reason we like the stock, because of the continuous investments likely to come in the sector, both by central and state government as well as by private players. This is a company which is continuously benefiting. Its order book as of today is already almost 2 times its current year revenue, and almost another 1.5 times it has bid for the orders. The numbers have been continuously going up. Margins close to 2-digit 11-12% in its EPC business, and on a consolidated basis, taking its ownership of some of the BOT projects and wind power closer to 20%.
Okay, fair point. I want to go back to Maruti, and I want to encourage some discussion on Maruti. We've got views from Sandeep Sabharwal, but I also want thoughts from both CK and Mitesh on Maruti, because Maruti has been one of the worst performing stocks on the Nifty, on the Sensex this year. It's a large stock. It was a bull market stock, and consensus has completely got it wrong this year. CK, how is the risk-reward ratio stacked up for Maruti now?
I think it's quite favorable in terms of the buyer, mainly because of the kind of pattern that it has actually shown. What Maruti has done has it has completely retraced the last leg of the advance, and curiously, right at the top we find a pattern, what we call as a rising wedge, and typically under technical rules, a rising wedge has the stock as a forecast returning down to the starting point, and the starting point is where it has reached, where we are currently. So therefore, based on the pattern, the decline should definitely now be over. In addition, this is also at a kind of retracement support. If you were to measure the long-term advance, which is the last about 2 to 3 years of advance, even within that advance, if you use some Elliott wave considerations, you see signs of pattern completion. So from every respect, Maruti seems to have completed one significant leg to the downside at the current prices. Maybe 100-200 rupees here and there, sits a 3,500 rupees stock that could be there because of volatility. But I don't believe we are going to see more declining legs. There is very high probability that Maruti is going to show you a rally, and that too will be a decent rally. The yen prices have already started firming up, and that is always a good signal for Maruti. I think the odds are definitely in favor of buyers at this juncture.
Mitesh, would you agree with CK, or you have the option of not to agree with CK?
No, obviously. I have a slightly different take. I think in the short term, yes, maybe the stock will bounce back. The recent bounce back which happened in the stock price failed to get past the 21-day exponential average, which is around 3,600. Maybe, we'll cross that and head towards 3,730 or so. But for me, I think the medium term or the longer term picture has definitely been dented over here. So anything close to about 3,730, I think should end the rally and present a very good positional shorting opportunity. So maybe in the short term, next few days, as the index kind of rallies, Maruti will participate on the upside, but I think eventually the stock should go back and retest the lows of around 3,200, which it did in the last week of February.
Less than 2 minutes to go before we hit the bell for the day. Let's get in some top stock strategies then. Siddharth, your top technical pick?
Well, there's one stock, Oil India, which we didn't discuss. I'm quite bullish on that stock. It's not very liquid in F&O, around 500-600 contracts on daily basis. I have a target price of around 324 in futures. One can fix top around 301 and go long over there.
Right. Mitesh, what about your top stock call?
In the short term, I would choose a buy on Lupin with a stop at 1800 for targets of 1870.
Sure. CK, your idea for the day?
Would be a buyer in HDFC at 1140, stop about 1125, targeting 1170-75.
60 seconds to go, and there's air of profit booking in global financial markets. Crude prices are down. Last night, metal prices have reversed, and SGX is pointing to a flattish start with a downward bias. But it's the global scenario, I think, is still looking very, very favorable. It is looking favorable because no bad news, no economic data, no fresh batch of poor economic data has come out from any of the major markets. If at all, there is still a lot of disbelief in the market. And if I look at the liquidity situation, the biggest and the most heartening feature for us is that flows into emerging markets, they've started. Flows into markets like India have picked up. Flows into markets like Brazil and Russia, they've turned positive. So sentiment well, we can argue it is better than what it was 15 days ago, but it is still bearish. Participation is low and liquidity is looking strong. The first rates and the Nifty has started moving 74.32. 74.32 for the Nifty. It's a cut off less than 1%, which is perfectly acceptable. For the Sensex also, it's the same rate, about 0.75% down for the Sensex, 0.75% down for the Nifty, which frankly is in line with what the global markets are doing. Now let's address some individual makers and individual stocks, and you want to start with banking stocks. They really hold the key. I mean, if you look at the banks, they would tell you which way markets would move in the short term. Bank of Baroda down, State Bank of India is not participating. PNB, the first rates are pointing to some weakness, and ICICI Bank, it's a very sharpish reversal for ICICI Bank. And HDFC Bank is also down by about 1 rupee, followed by Yes Bank, where brokerage upgrades are not really doing the trick for that one. So banks, both private banks and PSU banks, or I would say wholesale banks and retail banks, they both are down, and they both are down across the board now. There could be more trouble for JSPL. Foreign lenders are worried about exposure, their loan payment capability. 5.5% down for JSPL. It is falling on very, very strong volumes. In fact, metal is the casualty. JSPL down 6%, Vedanta down 6%, Tata Steel down 3%, Hindalco down about 4%. And then, how can we lose sight of Just Dial? I mean, what a volatile patch it's been for Just Dial. First it cracked, then it saw a huge rally, then it reverses again, and in last 2 days Just Dial has actually lost 20%. 608 rupees now for Just Dial. ICICI Bank is really getting hammered, and if I have to point out one teeny mini gainer, at least from some of the mid-cap space, it's India Bull Real Estate. But otherwise, Aisha, I'm really struggling to find a trend here or any set of clear outperformance.
Yeah, we're just falling prey to the global cues today, so it's nothing really out of the ordinary. In terms of gainers, Lupin, Maruti, but again, very meager gains coming in there, and very bleak a move on the likes of Kotak Bank, Ambuja, Sun Pharma, which are just about marginally in the green. But like Nikush pointed out, it's metals which is completely reversing trend. Add to that an ICICI Bank, which we just chatted about. The stock has been seeing long unwinding with its OI dropping as well, and had paused at its 50 DMA for a while now. That's cracking further. ICICI Bank down a good 2.5% as we speak. Couple of other stocks which are in focus. Concor, as its OFS hits the markets. Concor down 2.6% on predictable lines there. You've also got the likes of HDFC, which has started talks to buy Larson's General Insurance business. Idea, they're looking to buy Providence's 16% stake in its unit. ITC, which has come about with a sizable capex with regards to the paper business, which again is down. Reliance Industries planning to invest $2 billion in India cable TV, so look out for that as well. Tata Motors, this has been a gainer. Well, at least so far in the last couple of trading sessions, even though the JLR sales have come in higher by a good 31%. Tata Motors is easing off a wee bit. 338 is where the stock is. And yeah, Vedanta, they've made a positive comment saying metal demand is potential, or rather they see metal potential demand in China, even with the current slowdown. But Vedanta is falling prey to the global trend today. Metals, they're your sharpest taking the sharpest knock in today's session.
Actually, it's Just Dial which is doing that as well. 9% down, now sub 600, and which is why revisiting Just Dial, 598 and counting 8.5% down. The other one is Mindtree, with the caution exhibited yesterday, and there is a big slash in Mindtree as well, down about 6% in the session. So not a good start for that one. But all the other stocks have pretty much been highlighted. So just before we switch to the FM interview, Kunj, just a very quick view on Mindtree. I don't know how closely you look at that, but a profit or a warning issued yesterday, down about 10% in the last 2 days.